Welcome to Chak's YouTube channel. In today's video, I'll be bringing two of my friends, Rondo and Kelvin, two amazing traders, and they will be showing you how to trade with their own unique style of trading. So sit back and learn from this video. Wish you the best. Good luck.
Please, can you hear me?
Yes, sir. Very loud and clear.
All right. So basically, this is just my setup that I trade. Now, if I come to the chart, even if it's 30 minutes time frame, 1 hour time frame, 15 minutes, or even 5 minutes, if I spot something like this, I'm likely going to take the trade. Now, where can I spot something like this? I can see something like this in a support zone, in a resistance zone, inside a fair value gap, inside an OB whatsoever. Now, one of my secret ingredients to this particular pattern is using the line chart. Now, if I come into the chart, for example, let me make it a bit smaller. So I already know that I just switched to a line chart. This is 30 minutes time frame. Let me just stick with 30 minutes time frame. We also do a 5 minutes and 10 minutes time frame before I leave. So this is a simple resistance zone. And this zone here is a support zone. Now, I believe we all know the basic concept for support and resistance, because this is where the zone, the price touches this zone so many times. We had so many reactions, then broke down, then came here, reclaim it, and all that. So what I basically do is, when I'm trading with support and resistance zone, I just mark out this resistance and I mark out this support. Now, let me use my replay tool. Let me cut this part off. Please, you bear with me. The way I use this my replay tool, sometimes it can be very, very funny. I don't really know how to use it that much, so I don't offer mentorship. So it just sometimes randomly I just take my friends' classes and all that. Now, using line charts, you can see that this zone. So we can call this a very good support zone, because it was acting as a resistance around this zone. Then price flipped it, support bounce here, then hold me again, break below, it acted as a resistance, then from here bounced off the zone again. So you know whatever ways to identify your support and resistance zone. Now, once I see that price is acting very good on this zone, what I come to look for is this particular pattern you are seeing here now. Now, if I'm able to spot this pattern around this support zone, definitely I'm going to trade it. Now, let me switch back to candlestick chart. It's even clear here already. It's clear here already. I don't even need this a sweep already. This is a sweep, which is this guy. Then this is an inducement level, which is this guy. Now, let me remove this thing and think. Let me shift this one closer so I see it. Now, remember, we are trading it in just the basic support and resistance zone. So after marking that support zone, you can see that when price tap into that support, we had a clean break here. Then this was a sweep, and this is an order block. Now, see this particular zone. This pullback here. Now, for this setup to be very, very valid, it needs to have particular pullback, which you can see here, which is this guy. So most times, the intention of price is just to take out liquidity and move your way. Now, that is why these days I always use this liquidity entry, because sometimes the market may decide to ignore an order block zone. Market may decide to ignore an order block and go for just clearing liquidity and move. So many people call this structural liquidity or whatsoever. It has a different name, but I just call it an inducement. Now remember, this zone is just our normal support and resistance zone. Let me mark it out again to make sure you get it. So it's just our normal support and resistance zone based on the chart. So when price hits that zone, what I do usually is I set my alert on this zone. So when price hits the zone, I look for the reaction, what price is doing. Now, if you see now, price has clearly presented this pattern for me. What I just have to do is, I set my entry at this liquidity zone. Then I put my stop loss just at the low. Then I target the next resistance zone. So this is 1:3.6. There's nothing else. There's nothing special. Just as price hits this my support zone, I know that okay, time to look for reaction. Now the reaction I was waiting for is to get something like this. And exactly, let me mark it out. Let me draw it out so that you can see it clearly. We had from this zone, then a sweep, then we had a pullback before we took out that high. Now let me bring it out. You can see that it is exactly the same thing. So I just need to wait for price to come and take out this inducement and get into the trade. So this is simple way of trading my support and resistance zone. Now, if you notice, this particular zone now has now become a strong low on this 30 minutes time frame, because we took out this structure and this structure in general. So we created a new high. So I want to show you how to get a re-entry from the same support and resistance zone. Now, this zone becomes a strong low. Let me mark it out. Normally use this to indicate it. So this zone becomes a strong low. So when price is coming back, I do not expect price to take out that particular zone, because it is now acting as a strong low. This is because we took out this structure here, this particular guy. So if you trade range, if you get the idea of trading range, so getting another entry now, I just need to bring out my fib zone, my fib tool, then mark this zone from this low to this particular high. Now, what I want to do is I want to see price come into the discount of this particular range. Then I will know if I'm going to buy again or I'm going to just leave the trade alone. Now, this is me getting re-entry from that particular trade. Now, remember, this low is now a strong low in 30 minutes time frame. So if I want to trade this now, I have to go to a lower time frame, lower than a 30 minutes time frame. And if I go there, what am I going to look for again? This same particular structure. If price should present this structure for me, I'm going to trade it. But if price does not give me this structure, then I'm going to leave it. But for me to trade this, I want price to come deep into the 50% region or more. Now, this is my 50% region. But those that knows this liquidity, structural liquidity and all that, we already know that this is a very strong low now. So this particular zone now will now be acting as a structural liquidity for this trading range, this 30 minutes trading range. But since we are trading this range, we'll go below this 30 minutes time frame and all that. We'll go below 30 minutes time frame now. Let's go to 10 minutes. I like 10 minutes and 5 minutes time frame. Now, remember, this is a strong low. So I expect price to protect that low. Now, price comes into that low, taps into it. What I want to see again, this particular structure. If price does not give me this structure, I'm not going to trade it. But if price presents that structure for me in that 10 minutes, or let me even go to 5 minutes time frame, because now this zone has become a valid POI for me. It has become a valid POI. So if price should give me something like this, then I'm going to take another buy again to the most recent high. Now, where is this replay to? Now, let me. So when price taps into this zone, I'll just have to be patient to see what the market is doing, what the market is presenting for me. Yes, let me remove this thing, Chef. Let me remove this thing. So now, this was where we were before. So price tapped into this zone. Now, I'm trying to get this particular structure before I take another buy again. And if I'm taking a buy, I'll be targeting this particular high, the most recent high created as well. Take profit. Now, immediately price taps into this zone, I'll wait for this structure to form. Now, as you can see, let me zoom it this time. Now, this is a 5 minute structure. This is a 5 minute structure here. Structure. See that price has given me something like this again. Then give a pullback here, and then let me bring it out. Sweep, inducement, and we've got the double break safe. This one is one, and this one is another break. Now remember, this is now the new 30 minutes trading range. After we took the first trade, now this is getting a re-entry, knowing that this low is now a strong low. So market, we expect price to protect it. Whenever price comes into that zone, if price give us something like this, then we take the trade again. So now this has now become this a 5 minute low here, because we had a sweep. We had a sweep here just before taking out this high. Now, if you know, the origin of the zone that took out this high started from this particular low. So this now becomes my 5 minutes strong low. 5 minutes strong low. So I expect our market to do when market comes back into this low. Now we've got a pullback here, which is this particular guy before the break of this particular structure. And our pullbacks now become our inducements. What do we do again? We place our trades at the inducement level. This is a strong low for 5 minutes, but placing your trade at additional point, your stop loss should be here. But this is me trading 5 minutes range, and I know that this low swept liquidity before it cleared this internal structure. So now I'll be targeting this particular high as my next take profit zone, which we can see. This is a 1:7 setup. And you see this particular structure again, play that beautifully well again. So it's just the basic thing you know, but you will need to have a point of interest where price is reacting from before you take the trade. Now, like I said before, your point of interest can be anything. It can be inside a breaker block, it can be an order block, it can be a fair value gap or whatsoever. Now, there is another re-entry here again. In these 5 minutes, what I simply do again is, since the market is still giving me new highs, I just switch to line charts. No need to stress myself. I switch to line charts. Now, looking at this line chart, can you spot this pattern already? Can you, in this 5 minutes time frame, can you spot this pattern? Can you spot it? Now, this is what we have again. We have a sweep here. We have a sweep using line charts. We have another sweep here. Now, we have a break here. Now, just before this break, there was a pullback. Let me remove this. Now, just before this particular break, there was a pullback, which is this guy. Now, let me draw this thing out clearly for you again. So, something like this. Now, we've got a pullback and price cleared to this place, to this zone. So, let me drop it here. Let me bring the structure out. Can you see the same thing happening again? We also have the same particular buy mode there. So I switch back to my normal candlestick chart. What I do is, this pullback here now is this particular guy. It now serves as my inducement. It serves as my inducement zone. Then my sweep here, and this now becomes my strong low. And this now becomes my strong low. So what I do again is, sometimes I place entry at the inducement, but if maybe this inducement zone is very far from, since I'm using a more lower time frame now, so I can decide to use the fair value gap or direct to the other block. Now, if you are using this particular inducement as entry, then we have something like this. So unfortunately, this one was expecting it to take out this particular zone for a 1:3 setup, but price actually took this out. Then, but if you were using the other block here, I think this zone would be good for a TP. But remember, I'm a scalper, so I deal more with lower time frame. But again, if we check 10 minutes time frame, this is 5 minutes. If we check 10 minutes time frame, there is a very clean setup around that as well. So now let's go to line charts. Let's go to line charts using 10 minutes time frame. So this particular setup, let's draw it at here again. Now remember, we now have a new break of structure here. A new break of structure around the zone. Now, what was the origin of that structure? This particular low was the origin. And if you check this low has a sweep, and now it has another inducement, which this zone is valid, very, very valid in a 10 minutes time frame. Remember, we started from the 30 minutes time frame. So the more the range, the more we stay longer in the range, the more I just navigate to a more lower time frame to get for entries to continue trading that range. Now, can we spot that pattern again? Yes. Yes, to catch it. Sorry, not this one. Not this one. So can spot it. Yeah, this guy. So this particular low was the origin of this break, and we had a pullback here. Boom, broke structure. Bring it out. So you can see again, there is a sweep here. There is a pullback before we took out this particular high. So meaning that this particular low is now the most recent strong low in 10 minutes time frame, which means if we want to place a trade now, what we just have to do is we want to take out this particular inducement. I think I sent this particular setup to Mr. Charles last week. Yeah, sent this particular setup to me. So we've got a sweep, then we've got a break, we've got a pullback, entry at the inducement level, then we'll target any area of liquidity. 1:3, 1:4, 1:5 are okay. This will be for a time frame, so that's why my rectangle tool has this middle line. So I think I sent this setup to chart. So I just use 50% of that zone, since the zone is wide for a 10 minutes time frame. So now this is another 1 ratio. I think target this particular liquidity area, or even this strong high. But personally, I like doing 1:3, 1:4 setup. So 1:4 is always enough, 1:3 is always enough. So I target this particular zone. So this was one of the setup I took last week. This guy, and I think this guy as well. So within this range of 30 minutes now, we've been able to see 1 setup, 2 setup, and 3 setup. Now, this is how I trade my support and resistance zone. So whenever price hit my support zone, I just wait for price to give me this particular structure. Then if it gives me, I take it. If it does not give me, I just wait and check other pairs. I trade so many pairs. As long as this setup is available there, then I'll take it. Now, I think there's a BTC trade I took this morning. There's a BTC trade I took this morning. Yeah. There's a BTC trade I took this morning. Let me cancel. Let me remove things. Let me remove them. So now remember, I said your POI could be fair value gap, other block, and whatever. Now, I think I spotted this from a 2 hours time frame. Yeah, 2 hours time frame. So I noticed that there is a big void. So this was what I spotted in BTC. So like I said I used to counter trade a lot. So BTC is in this 2 hours time frame, we are printing new lows. So BTC did a sweep of this particular high, sweep this high, and it closed with the body and this void. When there is a void like fair value gap or so, price always come back to fill it. Now, price does not necessarily need to fill 100% of that particular void. Like I said, I trade lower time frame. So whenever I mark at my POI, I always look for opportunity to take small things from the market. Now, this was what I did when I spotted this void in 2 hours time frame. So it started from this place down to this place. So this particular zone is 50% of that void. So like I said before, price does not need to fill out. No, the first one, we checked how we can trade that particular setup using support and resistance. Now I'm showing you how I trade it inside a void or a fair value gap. Now let me bring out the structure we are looking for again. We want to see something like this. Something like this. Now this is a 2 hours time frame. Now our price feed 50% of this void. Immediately price did so. What next is for me to start looking for my trade opportunity. And what is my trade opportunity? This guy. Now, what I did was just to switch to 10 minutes time frame. Remember, we are inside this zone, inside this void now, inside this void. So when price feed 50% of this void, I have to look for my setup. Now, what is my setup? Something like this. It's just the very basic thing you know already, but maybe the application is a bit different. So when price feeds 50% of this zone, then I come out and look for it. Now, did I spot it? Yes. Let me show you. Now, price created this low. Price created this particular low. But before that, price created this high. So what I'll be waiting for is I want price to take out this high now. If price take out this high, this zone will now act as a sweep for me. This zone will now act as a sweep for me. Then I can always get my setup from this zone. Now, if you notice again, although if you go to 3 minutes or 5 minutes, you are going to see this structure. This structure I always watch out for. This sweep, break, then we've got a pullback. Then if you notice now, price did a retracement into this zone, taking out this inducement, and price bought. It's the same setup, but I'm not comfortable with that because I want price to take out this particular high first before I'll know, before I'll take the, this is the same setup, but I was not watching for that. I was watching for price to take out this particular high. Then, I think it was even in 5 minutes. It was there in 5 minutes time frame. So remember, after price tap into that void in 2 hours, I just need to switch to 5 minutes time frame. Now, looking at 5 minutes time frame, we can see exactly the same setup here again. Sweep. Then here was a pullback. Price bought from this zone before we took out this high. So I did not enter this buy. I did not enter this very first buy because I wanted this high to go first. I'll be more comfortable trading when that high is at. But just know that market mitigated this zone and then price took out this high in 5 minutes time frame. So knowing this, I know that okay, immediately we took out this high, I was now looking for my buy model to come and attack this new high. Now, looking at this chart, just looking at the chart, did you see the setup? Do you find this setup? Remember, this zone is a 2 hour zone. Now, when price tapped into that 2 hour zone, we switch to lower time frame, which is 5 minutes, it can be 5 minutes, 10 minutes, then go to your line charts. If you can't see it properly, go to your line chart. You can see that there was a sweep here, and this zone was the origin of this high being taken out. So this zone in 5 minutes has now become a new strong 5 minutes low. I mark it out, a sweep, and here we've got a pullback that created this high. Now that pullback now becomes the inducement for that area. I'll place my trade around that entry, that inducement zone. I'll target this high as my take profit zone. Now, let me draw it out for the structure out for you to see. So it's like this, the sweep. Got a pullback just before that high was out, and like this. So this is almost the fourth or fifth trade now, but you notice they are all the same thing, no difference. So what I do again is I just come back to this place, set my stop loss here, and then target this particular high as take profit. Now this is 1:2.6. So as ABCD, but you have to be very, very patient, and you need to have a POI where price is reacting from. You don't just trade it randomly. You don't just take the trade from any zone. So you need to have a POI where price is reacting from. Now remember, in the first instance, price reacted from a normal support and resistance zone, gave this structure. I bought it. Now, price reacted from a 2 hours void or imbalance. After filling 50% of that zone, price gave me a clear model for buy. Then I took advantage of it and I bought it. I think there was another instance with DSY. Okay, that one is on my Twitter. You can see that on my Twitter. So basically, and if you notice, most of my charts are always buy. I hardly do sales because most of the time when I do sales, I use stop loss. I don't know. The thing is, trading is do what works for you. So 80% of the time, my buy always goes well for me. So I just stick to doing the buy and leaving the sell. So basically, this is just how I trade. Now, if my POI is, let's say, a 1 hour order block or 2 hours order block, I mark out the POI and I wait. Once price taps into it, I look for that setup in 5 minutes or 10 minutes time frame. If price should give me that setup, I'll take it. If price does not give me, I'll close that chart and look for another trade. If I can't find that trade that day, I will not even trade for that day. I'll just chill. And sometimes price will come, it will not give me that setup. We just tap into that OB zone and buy. Then I will not have a missed entry. But the day it will give me that setup, I'll just trade it, and that's all. This is just one of the setup I trade. Okay, I think let's do one more example. I think USD CHF. Yeah, I had 2 clean buys on USD CHF last week. Let me remove it.
Guys, you can see what I'm saying. Mr. Kevin, thank you so much. You can see what I'm saying. I told you, by the time, what's it called, Mr. Kevin start talking, you realize I didn't even introduce him well enough. Now, let me tell you something again before we go to the next set of Mr. Kevin is about to show you. This man, you will never know when he's serious. That's one thing. If you see the way this man is destroying funding peeps, now he stopped posting, he stopped, what's it called, peppering us with his withdrawal. This one basically withdraw almost every week from funding pips. And the only thing it does is you repeat this same thing over and over again. Like you said, these are some of the things most people already know, but maybe the patience and a few things. If you're following, I wrote some things down here, which I've personally learned from him now this night, and I'll be adding to whatsoever I've been doing too, as long as it's in line with what I know. And I want you to do the same too. Don't just listen like as if you are listening to radios. Two people have the chance to ask questions once Mr. Kevin is done. I want to believe you are jotting things down, and make sure your question is strictly in line with what he has shown us this night. Please don't go outside of whatsoever Mr. Kevin has taught, because that's the only thing you repeat. Don't come with different things outside what he has shown us this time. Mr. Kevin, thank you so much. We're enjoying you, and we're still with you. Thank you so much.
Your boy is lawyer, Steve. Your boy is lawyer. So let me just give this last example, then we give time for question. Like I said, what I do is I scalp. Now, inside this particular region, now I've already seen my entry, I've seen my TP and all of them inside this particular region. So I do not need to start. It's something I do always. So whenever I see it, I know it. Now, I like using line chart. You see now, it's more clearer on line chart. We had a sweep. Now, price first reacted from this particular 30 minutes zone here. Now, in fact, this is also a normal support and resistance zone. It's a normal support and resistance zone as well. Because you should mark it out. Yeah, it's a normal support and resistance zone. You can see how price is reacting on that particular zone. So basic stuff. So once price did this on top the support and resistance zone, then I think I sent this trades last week or so. So it's simple. So I was watching for my setup again. Now, what is my setup? Let me draw it out again for you. Basic stuff. I just do the most simple thing to make money. So this zone again. Can you spot this setup around this zone? Let me go to 15 minutes time frame. Again, 15 minutes time frame. Yeah, 15 minutes time frame. So this particular trade, I wanted to sell it. I had a sell originally in mind. Now, I'll tell you why I wanted to sell it. Let me go to 1 hour time frame. Me, like I said, I don't used to follow whether market is in uptrend or downtrend, as long as market gives me what I want to see. And already I know that this setup is not going to give me 100% win rate. So I'm always ready for the outcome of whatever I want to see. I think it's okay. No, it's 1 hour. Yeah, it's 1 hour. So people that trade breaker block, they will know this. So this was the reason I wanted to sell. I had a sell here. So this is a breaker block from the indecision candle. 1 hour time frame. There is an indecision candle there, and on top of that, we add inducements to make it more valid. Inducement. Then we destroyed this zone. We broke this zone. So I was hoping for a sell. But before that sell, so this is I also use this zone as a POI. Whenever I see candles like this, I use them as my POI as well. But let me go back to let me mark it out and go back to 30 minutes time frame or whatsoever, so you see it clearly. Was it 30 minutes, 15 minutes or so? So these ones are trades I took last week. Do I hit stop loss? Yes, I hit stop loss. I hit stop loss. There is a trade in my timeline on EU. I took it and I chopped stop loss. Now, see this particular zone again. We had a sweep and we had a break. In fact, we even cleared this particular zone. We cleared this particular zone. And even this guy. See this pullback here. Again. So what I did here was when price tapped into this particular zone, you see the same setup again. The sweep, the break, the pullback, then I wanted to sell. So I just took a small buy from the 50% region. Here again, 50% region, because that POI was big. Stop loss at this low. I sent this to my group last week. I think here. Then TP, just this place, 1:5, the same thing. And now even inside this zone, I took another trade here again inside this zone, because this one, let's go to 5 minutes and see that same setup again inside 5 minutes. It's easier for me to spot now because it is what I've been trading. So it's easier for me to see it. Now, we can see a break here. Remember, this zone is the higher time frame POI. So when price tapped into this zone, price gave us a sweep, it gave us a break, then this particular guy acted as an inducement for the pullback, because this was another high. Yeah, so now this is 5 minutes. So this was a structure. This was the origin of this break. Oh no, sorry, rather, here was the origin of this very first break. This zone was the origin. So I mark out that zone again as my strong low. 5 minutes strong low. I mark it out as my 5 minutes strong low. Although my invalidation would be at this zone. But since I already have an inducement here, so I was comfortable with this zone. So I wanted price to come and take out this recent high created here. I think it was this, but overall, I wanted price to come into this zone because this is a very valid zone for a sell. So I was just looking for a buy to go to this place. So did I see my setup? Yes. This is a sweep, then with the break occurred here. This was the origin of that break. So that low is now protected for me. And now I took this zone. This was the pullback that served as an inducement for that zone. I did not use this particular inducement entry because when you see this candle, this indecision candle here, it is very, very important. That place is where the volume are. So price always do come back to that indecision candle. This doji candle now. Price always come back and tap it. Now, if you even notice, even that indecision candle did a clean sweep, presenting this setup, a sweep, then it caused a break, and there was a pullback. This one was even another inducement again for that 5 minutes time frame. Then I used that indecision candle to buy it. I think this one is on my timeline. So if you go to my Twitter timeline, you'll see this one. So this was it. So I just put my stop loss around this one. So well, normally I will not leave my stop loss here because this is just a 2 pip stop loss. So invalidation zone for this trade. Then I just extended my TP to this particular engagement zone, just like that. Keep repeating the same thing over and over and over again. But take note that you should have a POI where price is reacting from. Now, if you even notice again, the same thing happened after price took out this particular highs. After price took out this high, after price took out that high, this was now the inducement. This was not the inducement because this was not the inducement. Then this is now that block. If you should mention with your FIB level, so let's say from this low now, to this to this recent high created, or let me even use this slope safe. So this particular zone, this zone is already inside the 50% region. So value inducement, price came here again because there is a sweep here, inducement, but again to this zone. So this was another re-entry. I think, I took this re-entry. So I posted this one on my Twitter as well that, I got a re-entry from this zone again. Just, if you notice, what I've been doing is basically trading the same thing over and over and over again. I trade other models too, but this is my favorite model. I call it my A+. My A+ does not mean that it will not hit stop loss. It will hit stop loss, but it gives me higher condition and higher percent win rate. So basically, this is what I do. I think I've used up to 30 minutes already. So basically, this is what I do. And this is just it. I just mark out my POI. I wait for price to react. If it gives me my buy model or a sell model, I take it. If it does not give it, I leave it. Sometimes it will not even come. Just tap to that POI and leave me. I will not just smite. I will look for another trade to take. So it's basically what I do. And since I scalp, I use lower time frame, so I get more trades often. So this is just it. This is what I do. So I'll be. Sorry, Mr. Chax, please, I'm open for question. So you can just, I don't know how you are going to call the people that want to ask questions, but
all right, sir. Thank you so much. All right, thank you so much, sir. So we're going to take only 2 questions. See, guys, I told you from start that there is no way I'm going to describe Kelvin that you guys will get why I speak so well of him until I let you check yourself. I'm sure now you've had a taste of how he treats. And in fact, Mr. Kelvin, this is it. We're pleading before we leave. We'll definitely still call you. We still want to hear from you because time is not on our side today. But we must tell you, we sincerely appreciate your time. It's very, very very nice, and we learned a lot from you. Thank you so much, sir. Guys, if you're on this call now, I need you to just go to Twitter and say thank you to Mr. Kelvin. I need you to do that. I made a post now, I think a minute or 2 ago. Please check that and tell him thank you. Show sign of appreciation so that when we call on them again, they can call. So 2 people are going to ask questions. Crystal, sorry, I said Crystal.
Please don't tell me too much thank you. I'm sure.
You say, but guys, tell him thank you. Tell him thank you until his beard begins to grow. Till now, this old man don't grow there. Crypto style, you go first, then Wizard of Old, you go. So only 2 questions, please. After that, Rondo, please, are you here? Rondo is going next. Mr. Kevin, you have any setup for us? I don't even need to ask you. We better go follow him on Twitter. If he's unable to drop one now, he can wake up tomorrow and drop 10. That's one thing about him. He might not have, check the one he would like to give us, but he give out, free calls on his timeline every now and then. Same way on his WhatsApp as well. There's no way you're connected with him that you don't get things like all for free. He does not charge for anything. He's so rich that this man is a billionaire already. So go to his timeline on Twitter. Let me check so I tell you in case you're not following. Of course, you even see I already tagged him. So check, follow him, turn on his notification and free signals for you. Free. Crypto style, unmute yourself, please. and ask your question. Make it very direct, please, so we get to understand what you're saying. Or unmute yourself, crypto style.
Good evening, boss.
Yeah, good evening. You're welcome.
The question I have is how do I trade? Because I'm this kind of person that I love the higher time frame. I don't know if because what he brought out here, from what I'm seeing, I see that the team plays out in lower time frame a lot. So I want to ask if I can also be a higher time frame trader and apply these things and get a good result with it.
All right, sir. Mr. Kelvin.
Yes, to be honest, you get even more better results when you spot it on higher time frame. In my group, in my personal trading group, I think that's the model almost all of them trade, and I think I'm the only one that's capped. They do more of higher time frame, and it has a better result. In fact, they always tell us that price is fractal, which means whatever happens on the lower time frame happens on the higher time frame. This thing that I just explained to you now, if you spot it in 4 hours, it has higher chances of playing that than if I see it in 5 minutes. The reason I'm able to trade it well in 5 minutes is because I understand trading range. So if you want to trade it in lower time frame, even in higher time frame, just do small research on trading range. So if you understand your trading range properly, then it will be as simple as ABCD for you. The only thing that will be difficult is you being patient. So even on higher time frame, it has more higher winning rate on higher time frame. But the thing is, in lower time frame, you get more opportunities and you get larger ROR. But if you spot it on higher time frame, very, very fine. Take it. It's only two outcomes, stop loss or take profit. So just take it when you spot it. That is when you know how the setup works.
Thank you so much, sir. You've had that already. Thank you, sir. Wizard of Old. Now, the only reason why Mr. Kevin can do this on lower time frame is this is something he has been doing for long. It's not. He didn't wake up yesterday and start doing. Plus, he's from Benin. He uses juju. So, okay, Wizard of Old, let's go. Wizard of Old is the last person to ask question from Mr. Kelvin. Rondo will come on board. Right? Yes, before I forget, hold on. Wizard of Old. Our senior man is there, Tony Sniper. I don't know if you're here. Please, let me see your hand. I'm going to talk to him after this call now, if possible. I know how busy everyone is. I just pray it's free by next week, Sunday. You must have seen the way Tony Sniper kills good. So, if you are here, if you are here, like, okay, if Tony Sniper is there, please, we are saying it officially. If you are free next week, please make out time for us. We're coming to your day. So, guys, Tony Sniper will be with us next week, Sunday or Saturday, depending on the schedule. All right, Wizard of Hood, let's go. You're the last person.
Thank you so much, boss. Can you guys hear me? Yeah?
Yes, loud and clear.
Thank you so much, boss Chad and boss Rondo. You guys are amazing. You guys are really amazing. Just listening to Rondo, I've been able to like build a whole textbook. And I have a series of questions. And so
no,
the first
only two questions.
Only two questions.
Yes,
okay.
Only two.
Okay, let me compress them into. The first thing is, do you, because I mean, from what he has shown us, and we can see that the model works at least more times than none. Do we also consider time, the sessions that this setup would form, and do you consider the time of the day, or do you consider the day of the week? For instance, I mean, some of us will not be awake during Asian sessions, and this setup might occur during Asian sessions. So for him, does time of day come into play when these setups will be forming? And if they do, how does he operate when we have high impact news? So the question is, does he take into consideration the sessions or the time of the day or the day of the week? And also when we have high impact news events where we know that the volatility is usually very much, does he also have a protocol to operate in those
All
kind of
right, all right.
conditions?
I get your question already. Now, let me tell you one simple truth. I don't know when it's Asian session. I don't know when it's London session. I don't know when it's New York session. In fact, I just go and ask, I beg, London session don't reach. When is London session? So the thing is, once price taps into my PO, it gives me a break or a change of character, give me an inducement. It took out a recent high. It just give me this. But once price taps into this model, see, the truth is, me trading this thing, me trading this pattern, I don't expect my win rate to be 100%. I know it's almost impossible. So I do not expect my win rate to be 100%. So there are some factors that can cause losses. But I know that this particular setup, this model is profitable. Whenever I see it, I trade it. And sometimes when I hit stop loss, I will now see that, okay, that particular low that caused that sweep was Asian low. That was why price likely took me out and then went my way. So, but the thing is, if you are going to trade it, as I always said, if something is good for you, there is no need to learn another pattern entirely. What you should do is look for ways to improve what you are learning already. Now, if you want to trade this pattern, one of the ways which you can improve this pattern is if you know sessions, like the Asian session, if you get this pattern during Asian session, don't trade it, just leave it, because price is going to clear the Asian low, most likely. So these are some things you do to improve the win rate of this strategy. Me, I don't care. But if maybe I know that this particular low is Asian low, and if I know, I'll just avoid it. Unless I don't know, then I'll take that loss. And again, I don't care whenever the setup display. The only time I don't trade is around from 9 o'clock when market is about to close, because I don't swing. I don't like holding trades. Some of my prop firm account, they are equity based accounts, so I don't like holding trades till the next day. So if my trade are yet to trigger before 9 o'clock, once it's 9 o'clock, 9:30, I'll cancel it. If I'm already in trade and it is in profit before 10 o'clock, I'll close it. But if I see set up before around 5 o'clock, 6 o'clock, and it's 5 minutes time frame, I know that, okay, this thing can move, I will take it. If it does not move before now, it has not triggered, I will close it. So these are little things you do on your own that can improve the win rate of this particular strategy. But on its own, if you understand the logic behind it, it's a profitable pattern. So, but it now depends on you to make it more profitable for you by applying little things such as this. So when it is when the low created there, a strong low is an Asian low, you know that, okay, market is likely going to take this out, so I'll avoid it. And again, personally, I do not trade news. Why should I trade news? I used to trade news before. There was a day I was trading goods. I plan to risk $500 on gold, and that day there was news, and the thing went against me. At the end of the day, I lost about $2,500 on that trade. So that was the last day I traded news. Why? If there is news, I'm looking for 1:3 or 1:4 or 1:5. If there is no news, I'm still looking for 1:3 or 1:4, 1:5. So once there is news, I leave the market. The 1:5 I'm looking for, I will still see it after the news. So why will I put my account at risk? Me, I value money. $100 is big money to me. $100 is almost 150,000 naira. So I don't follow people who talk saying that small money is big money. I will not be willing to risk it unnecessarily. I take risk, but unnecessary risk, I don't take it. So trading news is not part of my trading plan. So I don't trade it unless maybe I fund my Naira account, then I'm trying to do flip or blue. I can trade news for that. But my funded account, my dollar account, I value them, so I don't play with them. That's it.
All right, sir. Thank you so much, Kelvin. Thank you so much. Words are not enough to thank you. Thank you for all you've done for us this night. God bless you. Guys, like I said, this is just the beginning. I don't know when, I don't know how, but I'm still going to request of Mr. Kelvin. Sometimes, if he's free, he will still come and address us. But more than just what you're seeing here, uh, more than what you're seeing on today's call, this is very little compared to what Mr. Kelvin used on the timeline. If you're following him, I'm sure you're not surprised. Although maybe you've not heard his voice like this before. But if you're not following yet, I'll advise you go on Twitter, go and check out his page. See, there's no how you be with this man and then you not get values of make money. That one is very sure. So go and check him out. And tell him thank you as well. Thank you, Mr. Kelvin. Thank you. I'll text you after this. What's it called? After this Zoom.
You're welcome, my
All right,
boss.
thank
Your
you, sir.
voice is always loyal. Should I delete my
Thank
Twitter?
you, sir. Now for you, where we go to see signal if you delete your Twitter?
Okay. That means you don't want me to delete it. Okay, that's good.
Don't delete, sir. Thank
All
you,
right.
sir. So
All right.
some of those things I wrote from what Mr. Kevin told us. Patience. He said we should be patient. Like, then have a POI price is reacting to. Then repeat the same pattern over and over again. Then do what works for you. Now, this is the same thing this man wake up and do every day. Every day. There was a time he was posting about his withdrawal and funding fees. Like, in fact, you'll be shocked. Like, you'll be like, this man can tell you, I just a chop and say, next thing, boom, 1 hour after, I don't post withdrawal again. And this, what's it called? These are results that has been verified. Like, I've traded everything so many times, one-on-one like this. So, this is not cap. Just go and perfect this thing. If you don't have what you're doing yet, if you don't have a system that works for you yet, this is something that is very nice. And he has already advised us that you can improve this thing by doing one or two things. That's all. That's all. All right, thank you, sir. Rondo, what's up? Rondo is market killer. Rondo is amazing teacher, and a great trader as well. So lovely to hear from Rondo this night. And I can tell you guys, if you are here, just don't leave yet. Rondo will be done within 30 minutes. By 10, I want us to be done with what's it called? Yeah, Rondo, welcome, sir. Give me a minute, please. So by 10, I want us to be done with the program. Uncommon is having his pre-birthday this night. And of course, I believe every one of us know we should be there to celebrate him. Right. So immediately we leave here, we just go say happy birthday to Uncommon and we'll celebrate with him as well. So by 10, I want us to be done. But let me tell you quick about Rondo. Rondo, great guy. He has been around for a while too. I think I have known Rondo now for about 2 years, way before I even become active on Twitter. Yeah, I think about 2-3 years now I've known Rondo. He might most of what's it called? Yeah. So most of the big guys around here too, in one way or the other, Rondo has impacted almost everyone's life. Like most of the big guys around here. He's just someone who does not make noise on the timeline, so you most probably won't even know. But I can tell you, he's a good trader too. There are only few set of people who send me setup and then I won't bother to like check. I'll just enter. One of them is Josh. Another person is Kelvin. Rondo is that one. I don't even have wahala. The only thing is if you send, I just know it's 103. I won't bother. I love 105 a lot, so I won't bother going for the 5. I'll just place it at that 103. You know one funny thing? Really it reaches the 3, the thing will start reversing. I'll just like see. As long as it's coming from this man, just do your thing and let it be. And you having the chance to learn directly from him like this night, I feel is something very precious and anyone shouldn't waste it. Tomorrow is starting the program. How coincidental can this be? Funny enough, I didn't even know about the program before now. Sincerely speaking, I didn't know about it. Because he didn't tell me about it and this was not planned. I got to see it through what's it called? The repost Josh did. I think he told yes. The repost he did on Twitter. So listen carefully to him this night and if you're interested in the program, very The way this man even makes this program, it's something that baffles me. Makes it so easy for everybody to get on board and learn from. So if you're interested in the program, after the what's it called? After his discussion this night, send him a DM on Twitter. Just search for Rondo, or I'm going to tag him as well because we're going to tell him thank you as well. Right. So everyone, thank you for coming. Stick around and learn from Rondo again. All right, Rondo, thank you. Take over, please.
All right. So good evening, sir. Good evening, everybody. I'm sure everybody can hear me.
Yes, loud and clear.
All right. So let me share my screen. All right. So I'm sure everybody can see my screen too. Can everyone see my screen, please?
Yes, very clear.
All right. All right. So basically, how I trade is similar to Kelvin's, but the only difference from my trading style to, like, I won't say any other trader, is my entries. My entries are different, but it's still smart money, still sweep of liquidity, break of structure, inducement, and all of that. All right. So the only difference from my trades and my entries, right? I take my entries from support and resistance levels, and I'm just going to, because of subtracts, I'm just basically going to tell you how they are created and how they are formed, and you can learn from there, right? So we all know that we buy from a support level and we sell from a resistance level, right? And all of this, you can map them out using your candlesticks, or you can map them out using your line chart. But since majority of you, this is your first time getting this type of information, it would be best to explain it using candlesticks, right? So for you to get a support level, right, you want a sell candle and a buy candle, right? So there are two candles you need, right, for a support level and a resistance level. So for a support level, you want a sell candle and a buy candle. And then for a resistance level, you want what? A buy candle and a sell candle. So now for the support level, when the sell candle and the buy candle is completely formed, where are you mapping out? You're mapping out the closure of the sell candle, right? So we have something like this. This is a sell and a buy candle. And then we map out what? The closure of what? The sell candle. And you can see how price reacts based off it perfectly, and then we move away from it. And then for a resistance level, we have what? A buy candle and a sell candle. I will map out what the closure of the buy candle. You can see how price reacts based off it perfectly, and we move away from it. So with that being said, you might be curious and ask, why am I using this type of entry model? Why not other blocks? If it's like, I change it from one form to my other block or my breaker block or whatever POI I used to use back then, and price will just dance around the POI for a long time and end up hitting my SL, right? But when I'm using support and resistance level, it moves away from it immediately. If it wants to hit your SL, it takes out your SL immediately too. It doesn't come and dance around your level for a longer period of time. It just comes, taps, and then moves away from it immediately. That is why I like the entry module, right? So, but how I approach the market is basically still the same thing as Kelvin talked about, right? But little bit of some twist, because everybody has their own approach to the market, right? So I'm basically just going to be explaining a trade I took on NZD JPY. I held this trade for I think three to 4 days. I closed it out on Friday. All right. So I'm going to be explaining this trade to you guys. So let's use the replay tool. Let's take it down here. All right. So on NZDJPY, and I'm basically also going to be explaining how I approach my charts, right? So I always start my analysis from the higher time frame, right, to know basically what I'm looking out for. So I have a blueprint or my trade plan. So when I go to the higher time frame, the first thing I look out for is what the most recent break of structure. So you can see from the daily time frame, my most recent break of structure is what I have that at the back of my. When I map out my most recent break of structure, that's me identify my structural bias. The next thing I do is know my swing high and my swing low, so that I can identify my range, right? So because when I can identify my range, I know that since I am bullish, I should be looking for buys, and I should be looking for buys at a discounted price, not at the premium price, right? So we have this point, we have this low, and then we have this high. I can see price comes down to the discounted price. You can see we have a sell candle and then we have a buy candle. So we're mapping out what's the closure of what? The sell candle. And you can see price has reacted based on that perfectly. And we can keep on looking for buys until this high is taken out, right? So we have that at the back of our mind. So now we have our structural bias at the back of our mind, and we know basically where we are coming from in price. So since we know all of that, right, so we have this confidence of taking trades, right? Now, countering trades are not bad, right? You can counter trades, they are not bad. No, countering trades are not bad. But I feel if you want to counter a trade, you should know what you're doing, right? It's going to be bollocks if you don't know what you're doing. Particular day when I took the trade on NZDJPY. So I basically have this same setup, sweep of liquidity, and then displacement. So when I see a sweep of liquidity, sorry, I said displacement is basically break of structure, right? So I'm going to basically explain a little bit of that. So now displacement is when we have a violent move that takes our structure, that breaks structure to the upside or to the downside, right? So when we have that displacement, right, break or that particular definition of break or structure displacement, it means that we have that particular trend, right? Either buyers or sellers, we have them active in the market, right? So for example, we have this low being taken out here, and you can see how violent we took out this low. So what does it mean? What does it tell you? It means that sellers are like basically in control. But even having that at the back of your mind doesn't necessarily still mean that you can take sales from this and that. No, it doesn't necessarily mean that. You can have strong lows or strong highs being formed and they can still be taken out. Why? If your structural bias does not align with your higher time frame, right? The higher the time frame, the higher your win rate. That's what I always tell people. The higher your time frame, the higher your win rate. The lower the time frame, the lower your win rate. That's my own perspective, right? So everything I'm going to be telling you is based off my own perspective and how I'm trading, right? And do not always look far to the left when you are trading. Like when I meet some people do this of zooming in completely and then looking far to the left, right? If you can't trade what the market is currently giving you now, I think you still have a lot of you still have a lot of things to do, right? So we know our bias is we're bullish, right? Right. So we should be looking for buyers. And currently we just had what displacement to the upside here. So we can map this out to be a break of structure. So now you might ask, there is no form of inducement. So why am I going to take this trade? I basically took this trade rather. If you check my Twitter, you see it. I basically took this trade because my structural bias on the daily time frame is my most recent break of structure is to the upside. So taking trades that align with the daily time frame gives me much more confidence, right? If my most recent break of structure on the daily time frame was to the downside, so it means I'm basically countering. And since I want to counter, I would always want to see this type of setup, sweep of liquidity, displacement, then price gives us some sort of inducement, and then comes back down to our origin, and then we move, right? So when we have something like, when we have this type of setup, it makes much more sense when it's a counter trend because I know fully well that price is going to induce early buyers or early sellers, as the case may be. So this trade was it was taken from the 1 hourly time frame. All right, I was taking from the 1 hour time frame, and upon taking this trade, now there are so many ways you would have taken this trade, and I'm going to explain it to you personally too, right? So it doesn't confuse you, because now from the explanation I gave of support and resistance level, you might be like, oh, okay, so that means his entry was basically here, the closure of this candle, right? That wasn't my entry, right? This was my entry rather. This, right? That was my entry. So understanding my entry module, I won't say it's difficult. There's nothing that is really, really difficult or impossible. It's just going to take you time, because it took me time to actually understand certain things too about this particular approach to the market. It took me time, right? So you can decide to use this entry module, or you can decide to still use other blocks. So if you decide to use other blocks, this is three consecutive candles. So since that's 3 consecutive candles, we all know that price can decide to like use this. And if you use that, you're not like you're wrong, you're not wrong, but I'm looking for the most precise entry so that I can have not a tighter stop loss, but I can have a much more better risk to reward. Right? So now the question is, why do I use that as my POI? So we have a sell candle and then we have a buy candle. So that's basically what a support level, right? And I'm not going to give you the whole logic behind this in this particular session, but this is a valid point for me to buy from. And remember what I said, I can mop out support and resistance using candlesticks, which I explained to you. I'm also using line chart. So if you switch this line
Oh, it seems the network is bad. Mr. Rondo, can you hear me?
That's low. So I'm set
Okay,
here.
okay.
So not fully well our boot. And since I did this, that's why I held the tree for the trees. I held the speed. He was here. I think he gave me 1 to 14 there. So TP was there. Initially, like Safchak said, I always
Oh, sorry, guys. Network couldn't let us hear Mr. Rondo. Rondo, are you here? Josh, can you confirm if you hear me or you can hear Rondo?
Yes, I can hear you, sir. But then I think
All
Mr.
right.
Rondo is having network
Okay.
issue.
Okay, it's nothing to worry about. Thank you. So let's wait a little for Mr. Rondo to join us back.
all right, sir, can you hear me now?
All right, thank you, sir. We can hear you loud and clear. All right, so the last part we had was
Can you hear me?
US. Yes, we can hear you now. Can you hear me?
Yes, I can hear you. My network was
Yes, it's fine. We can hear you now. Please go on.
all right. So let me share my screen back.
All right.
Okay, so can everyone see my screen?
Yes, very clear.
All right, so let's go back here. All right, so I said I took profit at this high for the reason being I started my analysis from the higher time frame, from the daily time frame, and this is the 1 hourly time frame, right? So taking profit at that point is quite reasonable for me because my analysis started from the daily time frame. But like I said earlier, Sharks mentioned earlier, I always take profit at one, right? Especially if I am not 100% sure about the trade, but 99.9% of my trades are you check on please, can you hear me now?
Yes, we can hear you.
All
The
right,
network
so
is-
you've been hearing me.
yes, we can hear you now.
All right, okay. So let's play price forward and see what exactly happened. So you can see we get triggered. I won't say quote unquote perfect, right? But this is one thing I said I like about support and resistance levels. Once we get to that particular level, we get tagged in and we move away from that level like almost immediately, right? We don't dance around that level too much. That's why I sorted out to change my entry module, right? You can see I still trade the same way like almost every other trader does. My entry module is the only thing that is different, right? So play price forward and let's increase this. Okay. Now play price forward. You see we hit TP. We get tagged in on Tuesday, on Tuesday around 10 a.m. And I'm not also the type of trader that also I don't like looking for re-entries and all of that stuff. Once I get my setup, I risk everything on that one setup. Like so I risk 1%, it's 1%. I don't do all that re-entry. So you can see we smashed take profit on Thursday, yeah. On Thursday, yeah. That's when we smashed take profit. But I closed the trade, yeah, on Friday. I closed it on Friday, right? Because I could not hold it over. Right? So this is basically how I approach the market. Still the same thing. The only difference is just my entry module, right? Sort out for your structure, understand order flow, understand liquidity, and then your entry modules, right? Once you get that, I think you should be jiggy enough, right? So I'll give a recap on my approach. So when you open your chart, identify your most recent break of structure, right? So once you identify your most recent break of structure, if it's to the upside or to the downside, so you know if you are bullish or bearish. So you have at the back of your mind, am I looking for buy setups or sell setups, right? So if you're looking for sell setups, you know probably you just broke structure to the upside and you're expecting that pullback to your discounted price so that you can buy more, or vice versa. You just broke structure to the downside and you're expecting your pullback to your premium price so that you can sell more. So you can comfortably counter the premium price and make sure you are taking your trades off a POI. If it's not off a POI, it's off liquidity. So probably price as taking liquidity off buy side liquidity or sell side liquidity. I'm sure everybody can hear me. Everybody can still hear me, please.
Yes, sir, we can hear you.
All right. So when price is coming off your buy side liquidity, you know you should look for a sweep of liquidity and then displacements to the downside, and then you can counter your trades to a much more discounted price so that you can buy more, and vice versa. So my own advice is you should always start your analysis from the higher time frame, right? Like understand your structural bias, because when you understand your structural bias, it's going to give you much more edge and much more confluence, and also make you not guesswork. Because one thing I always tell my students or anybody I teach is do not predict the market, right? Just react based off of what price is doing, right? They don't try and come and predict the market and say, oh, the market must actually buy from here, or it must actually sell from here, or this or that. That's you trying to predict. Do not try to predict. So I'll give one clear instance about predicting the market before I am open for questions. Once I mentioned one thing about, and I probably analyze the market for the new week with you guys. One thing I said was looking far to your left to trade, right? So I said something about marking out your support and resistance level, right? So now you see we have our setup here. We have a strip of this side, and then we have proper displacement, right? And then we can map this out to be what? our resistance level. We can map this out to be our resistance level because that's a buy candle and then a sell candle, right? And then the closure of the buy candle is what? Our resistance level. So now, is this a clear setup? Obviously, it is a clear setup. We have a sweep of liquidity and we have, see, you can see how this proper displacement is, right? But now you're mapping out what is currently happening, previous price action, and this was like last 2 weeks or so, right? And on the daily time frame, we are already coming off what? Our daily PY, right? So structure and order flow is very, very important, right? So now you should not be looking far to your left. I know you might be looking far to your left to say, okay, let's get that pullback, let's do this, let's leave that alone, right? The moment price has started up your pro trend, right? Your pro trend has commenced. Go with that, and that is you basically looking at what the market is currently printing, right? So let's look at I trade gold, GU, GG, and NJ. Those are the things I basically trade, right? So I'll give you guys a hint how I trade. Everything is done, and what you should look out for. So since it's a new week, I start my analysis from the weekly time frame. Right? Since it's a new week, I start my analysis from the weekly time frame. So the same rules, same everything applies. So from the weekly time frame, what can you basically see? You can see we've been very, very much bullish, right? So there is no like much recent break of structure here on the weekly time frame. If you decide to want to look at your most recent break of structure on the weekly time frame, it's basically going to be this, right? And since it's that, it means we are bullish, right? So you have that at the back of your mind. But now, for we to basically buy more, right, from the weekly perspective, we want to see price come to our discounted price so that we can buy more. So what does that basically mean from the weekly perspective? It means that we should start getting that pullback phase, right? Pull back into at least 50% of this range, which is from here. 50% of that range, or anything below the 50%, which is our discounted price, right? So now the next thing we do is we go to the daily time frame. So from the daily perspective, what can we see? Are we starting to print our pullback phase? Yeah, I can see we're basically starting to print our pullback phase. So same setup, sweep of this high. Though I do not really, as time goes by as a trader, annotating your charts, like putting all those sweep of liquidity, all of those things, at some point you might not necessarily be doing it again because you just map them out with your eyes and you are good to go. Right, so looking at the daily time frame, you might not really still understand this particular type of structure, right? So if you want to see more price action, you can go to the 4-hour, all of that, right? So from the 4-hourly perspective, we can see it much more better, right? Because we can see much more candlesticks, right? So we have our sweep of liquidity, and then we have our displacement. So now we all know from the weekly time frame we are bullish, right? But from daily, we've created what? A strong high, right? We created a strong high. Structure on the 4-hourly time frame is telling us what? That we are bearish. Structure, like I'm not talking about our most recent break of structure because our most recent break of structure is to the upside, right? We're following from what the daily time frame is telling us, right? So this is going to help you, for those of you that is to counter and all that, this is going to help, right? So looking at this, the only way you can take sell trades is an advice. The only way you can take sell trades now and comfortably start targeting these lows is if order flow kicks in. So now people have different definitions of order flow. But for me, order flow is the process of mitigation, right? So when you see mitigation, first, second mitigation, after your third mitigation, you should get a full release. If after the third mitigation, you get a fourth mitigation, a fifth mitigation, that is basically just a build up for liquidity, right? So now we follow our same rule, our same plan. What was the most recent break of structure on the 4-hourly time frame? It's the upside, right? So when you have a break of structure, you should always expect a pullback, right? So what was our range from the 4-hourly perspective? So most of you mark this out, right? Be your range. But for me personally, that is not my range because this is just a pullback, and then this, because if you go to a higher time frame, 8 hours or probably 12 hours or even the daily, right? We have a sell candle, we have a buy candle, and then we have this break. So where did that whole move originate from? It started from this low. This will serve as inducement into this loop. And this is basically the same type of setup that Kelvin just talked about, right? You can see inducement into this, right? So now, but for the meantime, we can take counter trades from this point into our discounted price, right? So this is where you can go to your 1 hourly time frame or your 30 minutes time frame or your 15 minutes time frame. Whatever time frame you choose is solely that it's based off you, right? Because trading is based off you. So your type of person, the type of patience level, whatever, that is based off you. Not your mentor can tell you this is how he approach the market, this is how he sees the market, but how you approach the market is very much important, right? So from the 15 minutes time frame, you can see we've had a sweep of liquidity, and then we've had the displacement, and the price is reacting based on price is coming for this resistance level. I hope you can be indifferent. So we have the buy candle and then we have a sell candle. So the closure of the buy candle is our resistance level. You can see the price has already given off the trade from here. So how do we confirm and look for more setups, right? And look for more setups because now we've had this low taken. So this is our new range from this point to this point. So we want to see this low basically taken out before we can look forward for more sales. We want to see this low taken out before we can look for more sales. Bear in mind that from our 4 hourly time frame, from our daily time frame, we have points we basically want to buy from, right? So this is how you can comfortably counter up this to this point here, right? This is how you can basically counter up to this point. So basically, if not if looking for buy setups on gold right now, I want to see buy setups from here, right? This is valid to me because now you can see this is a buy candle and then a sell candle. It's being broken. What is it? It's now a support level, right? So this can serve as inducement into this. So this is like, as people might say, A plus setup or A plus plus setup. So this is a very valid setup for me. But now there's so many things that happen in situations like this. Price may necessarily not come to this POI. That's why I said you react to what the market is doing, you don't predict. So price may necessarily not come to this point. So what you basically have to look out for is when you counter your trade and you take your sales and you get to your discounted price or even 50% of that price range, and then on like the 1 hour or the 15 minutes time frame, you see a strong low being formed. Once a strong low is being formed, it means that your pro trend has resumed. As simple as that, right? The moment your strong low is being formed and it is in a well priced level, take your buys, right? Because the moment you start waiting for here completely, price will necessarily not get there. So now you waiting for price and see price must get here. That is you predicting the market. But the moment you're already know at the back of your mind that okay, on the 30 minutes, 1 hour, or 15 minutes time frame, once I see a strong low being formed at the well priced level, that's a discounted price, I can look for buys, I can take off my buys. As simple as that. So now I've given you a hint on what you should look out for on gold. You can look for more sell setups until you get to at least 50% or discounted price. So do not buy at the premium price and do not sell at the discounted price. Always buy or sell at the well priced level. Right? So that is basically my 2 cents on how you can approach the market and how I approach the market. And I think that's it for me. So, Sir Chax, over to you.
Thank you so much, Rondo. Like I said, Rondo is an OG, so I'm not even surprised. If Rondo has enough time to speak to us this night, I'm sure even after 1 hour, Rondo will still be giving us back to back. Thank you so much, Rondo. Thank you so
Yes,
much,
chief.
guys. If you pay attention very well, right? If you pay attention very well, it's almost the same thing both traders are doing. The only difference is just personal approach to the market, and that's what Kevin told us the first time. The same thing Rondo is saying again this second time. Thank you so much, Rondo. We sincerely appreciate your time. And we're sorry
Yes, sir.
we didn't have enough time for you to walk us through everything you would have loved to show us. But this alone is even more than millions to us. And we've added to our refinements, we've learned a thing or two. Please, guys, check out Rondo on Twitter. He's running a program tomorrow. You should be there for it. If you're looking at adding to what you already know, or you're looking for a means to refine what you have, or you don't even have anything at all, you don't have an edge yet, you don't have what you're trading yet, check out Rondo. And good news, uh, Tony Sniper just confirmed on the timeline that he will be with us next week. He has agreed to give us his time. I think you should say thank you to him as well. So, guys, I need to go on Twitter and appreciate Rondo for his time as well. Thank you so much. Thank you. And Tony Sniper, welcome me. I'll text you after now, so you give us the time you'll be free. Then, guys, feel free to tag those. No, maybe not tag. Let's not get the timeline messed up. But feel free to suggest or send those you like to have on board, those you like to learn from, and you've not been able to pay. Feel free to send them to my DM, and I'll definitely reach out to them. Before we go, two people will have the chance to ask questions. From Rondo, oh, I can see the hands up. So many people will have questions to ask. But before then, I don't know if Tony Sniper is around. I don't know. Tony Sniper, if you're around, please drop a text. Let me see your name or request for mine. Let me speak to you as well. So I'll be adding. Josh is meant to speak after now, but no, Josh is an in-house guest. Josh, you na inside, you don't even be guest. Time is off. So Josh, that one I can always call him anytime. He will make out time for us. So there's no way he'll be able to teach us again today. We'll be bringing two more. Maybe okay. Next week is going to be two because this is the first time. I'm trying to see how we can do it that we don't exceed maximum 1 hour 30 minutes. So don't get too tired and forget what we learned. So we already have Tony Sniper for next week. We'll look for one more person and then we'll have two speakers next week. Josh, are you here?
Yes, sir.
Okay.
Yes, sir.
All right, please pick two people. Let's have them. No, Wizard of Old has already asked question earlier, so he's not asking again. Pick two more persons and let them ask their question, please.
Okay, BlackRock. I don't know. I'm going to send you the mic now. So unmute yourself, please, and ask your question. Then after BlackRock, Graham, you're going to ask.
Okay, good evening, sir.
Good evening,
Thank you
sir.
very much for the opportunity. Really appreciate it. Just a quick question for our boss that just taught us now. The first question is, at what point do you consider a setup invalid, or at what point would you say that a setup has missed your entry, that is not going to come back? For example, you've identified your break of structure, your inducement, and all of that, then maybe in your direction. At what point are you going to like delete your limit and say, okay, since this trade has left and it's not going to come back again? And the second question is the example that you showed us on NZD JPY for the buy setup. I don't know if I'm the one, but I could not identify an inducement before the entry. So I would like to know at what point or in which type of setup would you say that you must see an inducement first before taking an entry, and in which scenario would you say, okay, maybe the inducement is optional, and then once you can identify your break of structure and your support and resistance level, you are good to take an entry? So those are basically my questions, sir.
All right, Rondo.
I don't know if any. Okay.
Yeah, we can hear you.
You're
Rondo,
asking.
answer that.
So if I get you correctly, you're asking what type of setups do you look out for inducement, right? Can you hear me?
Oh, I think he muted himself. Hold on, please. Let me unmute him back. No, if you ask question, please don't mute yourself until answer has been provided. I can't even find him again. Request for mic back. I think it's off. Okay, BlackRock, right? Is it BlackRock?
Yes, sir. Yes, sir. I'm the one.
Okay.
Yes.
go
So
on with
yes,
your
yes. That's
question.
what I meant. Like, what type of setup would you need an inducement first before taking an entry, and what type of setup would the inducement be an optional criteria?
All right. So basically, like validate a PY. When we value gap, right? So let's go back to that chart and let me explain it properly for you. So there are two ways I validate my POIs, like I just explained to you earlier. And like I said, number one is through liquidity inducements, right? Which is knowing a point where we can spot on early buyers or early sellers and price can take them out so that we can use our lower or higher POI as the case may be. So in this particular scenario, we do not have any form of inducement, right? And if you followed up closely when I was explaining, from the daily time frame, we've mitigated our daily time frame POI, right? And we're bullish, right? So our basic structural bias is we are bullish, so we should be looking for buys, right? We should be looking for continuations, right? That's what we should be looking at for continuation. And from what I just explained to you earlier, like a few minutes ago, mapping out your inducements is two different ways. It can be liquidity, lows or highs, or it can be fair value gaps or imbalance. So you can see fully well that we have this huge amount of fair value gap. We have this huge amount of fair value gap seated here, right? So we know fully well price is going to come back to this fair value gap, right? And probably few 50% or not every time, not necessarily the whole fair value gap. But this serves as a reason to validate my POI, right? Having at the back of my mind that I am coming off a higher time frame POI, right? I am bullish. So that gives me much more confidence, not even just confidence. It gives me much more confidence that this setup is valid, right? So when I have this huge amount of fair value gap or imbalance, right, before my POI, right, it validates my POI, right? But when I have a setup like this, sweep of liquidity, break of structure, then we have something like this. So when I have something like this play out, right, 99% of the time, this type of setups always make much more sense when they are counter setups, like counter trade setups. They make much more sense. Now, this is something you have to study or back test or forward test as the case may be, right? But this is what I'm like I said, everything I'll be telling you is based off my perspective, right? And how I've been approaching the market and trading the market. So when I see setups like this and it aligns with my pro trend, I take it, right? Because I have this huge amount of imbalance. That's why I said, that's why I explained my way of analyzing breakout structure as displacement. When I see a rapid move that breaks a high or a low, right, it gives me that much more intent or that much more confluence that buyers or sellers, as the case may be, are like in that particular swing high, that swing range, right? So you can see, taking out this high, you can see how rapid this high was broken, right? You can see how fast this move was, right? Took it out very well, like, and again, we are bullish. So you can see everything is like the confluence, everything is adding up. So when I see setups like this and it aligns with my pro trend and leaves this shit amount of fair value gap, gives me reasons to take the trade and validate my POI more, right? But when I don't see inducements like a structural liquidity, right? If I don't see structural liquidity, and this is like a counter trade, I'm not really going to be sure about the trade, right? I'm going to be very, very skeptical, and most of the times I won't take it because now it's a counter trade, and now I'm trying to counter, and there is no structural liquidity. It's just a balance, right? So when it aligns with your pro trend and you have this amount of imbalance, it validates your POI. But when there is no structural liquidity, right, it doesn't necessarily validate your POI as when it is a counter trend. So BlackRock, I hope I answered your question.
Yes, sir. Clearly, I'm sure he got answers to his question. Thank you so much, Rondo. Thank you so much,
Yes, sir.
Rondo. God bless you. God
Yes,
bless
sir.
you. So, guys, this is what you do. They would have loved to share more with us. Unfortunately, time is not on their side. Just follow them on Twitter. I'm sure there is no way you'll be on what's it called, Kevin's or Rondo's timeline within the week that you don't get set up. Now, why do I keep saying this? They're going to drop the same thing they showed you this night. If I were you, what I'll do is if I get a hold of that setup, I'll go back and try to see, okay, what are they trying to do here? How is it in line with what they said on the Zoom call? And then I'll try to practice and replicate whatever they did here until I fully understand it and I can do it at my own, what's it called, convenient time. One thing I learned from Rondo is this: you must see. First thing, if you check his chart, he said, "Master yourself, not the market." This is so true. And like I do say, if you like teach modern people, don't expect them to have the same results at the same time. No, no. The market is more of you yourself than the what's it called? The actual price is it going up and down. You and I can take the same trade now. A B, I'll end up in profits, you end up in loss. Why? The way I'm able to handle the process of trading. So the first thing I learned, even before I start talking, is what? Master yourself, not the market. And the other thing he said is, you see the way he has given us an what's it called, a confluence or additional information to how to use the chart. If you know this is what you're doing and you want to add this to it, he said, come on from a higher time frame, see what is happening there. If you're bullish, look for buy. Like he said, do not sell at discounts, right? Neither should be buying at premium. I think that is something everybody should go on with as well. When prices at your discount level, look for more buys. When prices at premium level, look for more of sales. That's what Rondo told us this time. And he has given us so many examples of how to approach these things. Thank you once again. We sincerely appreciate your time. We didn't take this for granted. Guys, please go online, go on Twitter, go and tell them thank you. On behalf of me, not just you, tell them thank you on behalf of me. So that next time when we call them, they will definitely show up for us again. I'm sure you've gotten values for what's it called, your time. I'm not sure today's not quite that. But then, if you're here, thank you, Tony, and thank you for promising us to be around next week. We appreciate. Mr. Kelvin, thank you for staying by. This one is so humble. Despite his busy schedule, he still stayed back to the end of the what's it called, the call. You won't know more about what's it called, Kelvin, until you get really, really close to him. Mr. Kelvin, thank you. We appreciate. Josh, don't worry, Josh on this. He is always available for us.
now we get that.
Anytime we need Josh, we can always get a hold of him. You know, it will be very bad if we're here and then Uncommon is holding his pre-birthday party and then we're not there to say hi to me. Now I'm sure most people wouldn't have, no one would have even known me online without the help of what's it called, Mr. V and Uncommon. When I got online, they were the one promoting my page. So I feel it's not the best if we're here and then they're there. So guys, this is why I won't stay longer than this. Let's go say happy birthday to Uncommon. And to everyone who is there, I can say Joe. To all my students who are here, and to all my friends and followers on Twitter, thank you for coming. Next week is going to be powerful and better too. I have some setups to share with you. I don't know if I can do that before we go. All right, but then let me just say this. NZA card for 5 minutes. I'm looking for a sell, strictly based on what Kevin showed us this night. NZA card for 5 minutes. I'm looking for a sell. AUD NZD card, sorry, AUD NZD 60 minutes. That's 1 hour time frame. Still based on what Kevin showed us. I'm looking for a sell. I'm more of a seller than a buyer, so permit me. Now, based on what Rodo told us about lows and highs, if you check Euro USD, previous week high, I'm looking at that previous week high, last week high. Coming, I think that should be last week high, yeah. I'm looking at last week high and the previous 2 week high. If they're taking out, I'm looking for a sell. Guys, permit me, I'm more of a seller than buyers, like I said. Then GBP USD, 15-minute time frame, I can see a buy. A little of more of what Kevin told us as well. AUD USD 1 hour time frame, I'm looking for a buy as well. Still very similar to what Kevin told us. Now, one thing you're going to notice is both all the setups I gave now, it's now left for you to go and find what's it called, the price I'm buying or selling from. If you want me to do that, I can do. I think time is not on our side, but if you pay attention to what Kevin showed us this night and what Rondo showed us this night, these things are not going to be difficult for you. All the pairs I pointed out, they are strictly based on. In fact, I didn't even know this is what they will be teaching us. They are strictly based on what Kevin and Rondo just showed us this night. Everything, nothing different. All right. Maybe a little of Maggie and salt, that's all. But then almost the same. Once again, happy new trading week. I wish everybody good luck and happy trading. Feel free to share your feedback. And if you want us to continue with this, let me know. If you want us to stop, of course, let me know as well. Until next week, Saturday or Sunday, to everyone who made it possible to join our biggest co-host, thank you, Mr. Kelvin, Mr. Rondo, and to everybody who listened. There wouldn't have been this class without you guys. Thank you for coming. I'll see you next week. Bye-bye.